to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Just trying to get my head on straight here. Of course, Chris driving the bus out of El Tunco. I think I heard that earlier. Looks like he's rocking and rolling. Actually, Chris joined us in the day trader room. I think you took a couple bucks from the market today, didn't you, Chris?
I did. Opening range in the stock market. S&P 500 was kind to me this morning.
Good for you. Good for you. I officially got my ass kicked. Small ass kickings, but nonetheless lost money today. Boo, SS boo. A little disappointed in my personal performance here in the market. So guess who's going to be doing lots of journaling and self-introspection this weekend. I got to remind myself like I'm working for Liam. Well, where the hell is the damn lounge chat room on this thing? So funny. Actually, and I'm in the day trader room, it looks like. Oh, no, I'm not. Oh, goodness. I can't even get my head on straight. I was all ready to go. Then everything got all messed up here. So my apologies, everyone. We have on actually today, Friday, TGIF. We have on the call here today, our Solana guru. Is that what we're going to call you? I don't know. Or probably our captain of the Harmonicans also too. So you got a whole bunch of labels around here. But Steven's on the Afterparty call here today. Steven, you ready to rock these people's worlds?
Let's do it.
All right, so I'll do a brief overview of what I've seen in the market here today. Obviously, we've had a fairly substantial pivot coming out of the FOMC meeting. I really do believe, and I was posting in the lounge yesterday, that it felt like we had sort of like sell the rumor, buy the news. God, look at this. I'm like completely disorganized. Here we go. On that FOMC event. If anything, if nothing else, if you're watching this video, if you're watching this for the first time, if you're relatively new to the markets, if you haven't really seen this stuff before, this was absolutely textbook sell the rumor, buy the news event. Absolutely textbook. Literally could not script this any better. It's all ebb and flow back and forth. I mean, we had an absolutely huge puke out there, really pretty little triple top breakdown. Then we had some pretty violent sort of railroad track patterns and just absolute puke out. Market is collapsing, sky's falling. It's the end of the world. And of course, ironically enough, that was all I hate to say it, but I think it was actually fairly scripted because you also saw it happen in the broader stock market. It wasn't as pronounced in stock land. In fact, really all they did was just sort of back it up, eat some tails, fill in gaps, that kind of thing. And then coming out of the event, a big relief rally on the other side. What is interesting, Chris said there, though, things maybe got a little bit ahead of themselves here, maybe a little too far, too fast. If we were looking at the futures markets, we do have a day trading room at TRI. We were watching the stocks this morning. I mean, like here's the S&P 500, for example. I mean, just gapped violently higher. And, what a big surprise. They ran all the stops up top here. All these people that thought they had shorted the top of the market and they were just going to ride those shorts indefinitely. So they run all of them out. And I think Chris was even saying there a moment ago that opening range trade, I'm not exactly sure what he was trading there, if it was SPY or something else, but you can see how they just dumped this thing right out of the get-go. It looks like it's found a bit of flooring. Although that does look like a lower low there on that candle there. But I guess the question ultimately here is why? And of course, that's half the reason why I do these videos with you guys, trying to explain some of the fundamentals that are driving price. And I think really obviously, the 600-pound gorilla, as they like to say, was the jobs report that came out this morning. Econs tastes great. Jobs numbers, U.S. growth totaled 175,000 new jobs in April, much less than expected. Unemployment rate actually ticked up, go figure, which I think was kind of like a function of, and we'll just pull up the actual numbers themselves. Get the impression that probably a lot of people are maybe getting a little disillusioned with the job hunt, and then of course we've got the baby boomers slowly leaving the economy, and so participation rate, those kind of numbers actually ticking down. So headlines here: U.S. job growth slows in April, and ironically enough, this I think is actually a really good example of what's good for Wall Street is not always good for Main Street. What's good for Main Street is not always good for Wall Street. So this is a scenario where news that isn't good for Main Street is good for Wall Street. Why? Because I get the impression that if the inflationary pressures had continued, and we sort of didn't see a slowing in the overt labor market, the Fed might have actually even had to think about raising interest rates. I get the impression that that's interesting. TD Bank decreased to a 3-year low. It's funny how we talked about months, if not years ago. It's probably months ago. How TD Bank was the most heavily shorted bank stock around. And actually, I even was having a fun conversation with the bank manager. We had a really great bear put spread trade on for a while, and I was teasing him that TRI was short his stock, and he would sit there and go, "Oh, well, thank you for being short, because that gives me the opportunity to buy stock lower." Well, I don't know. Do you really want to be long that stock? That's another conversation altogether. But anyway, so today's news, back to the conversation du jour. Non-farm payrolls. As you can see, market was looking for 238,000. Number came in 175,000. Previous numbers were 315. So, pretty precipitous drop. We always say you have to be very careful with these non-farm payrolls numbers. How many of us actually believe the government statistics about inflation? I mean, who's conning who here? It's pretty depressing, really, how badly we in the public are being played by these, corrupt bankster. Goldman Sachs basically runs the U.S. Treasury, all that crap, right? So point of the matter here is the number came in pretty weak. Fedsters have been talking to us about wanting this number to calm down. And ironically enough, things like hourly earnings, you can see how that ticked down. And then, things like, I suppose the year over year earnings numbers, 3.9 versus 4.1, that ticked down. So this is all that kind of talk that, okay, maybe inflation isn't that bad. We'll see how this goes over time. I mean, one data print certainly isn't a new trend. Obviously, when we're looking at this data, and I always love to do this, is apply technical analysis to the fundamental data sets. I think you can make the argument that the workers are getting squeezed here. The higher short-term interest rates are quashing, I don't know whether that's the right word or not, the demand for workers, and how everybody and their brother was had help wanted signs and all that, and they were willing to pay anything to get workers. I guess that was in through this area here. So does that look like it's trending lower? It kind of does. And of course, we probably want this number to be down around 2.5% kind of idea, where the Fed says we have sort of hit our official objective of inflationary pressures. So long and short of it here, I think a lot of the worry over the labor market, the workers, the slaves, demanding more money and getting it. And of course, that leading to greater inflationary pressures in sort of the world's biggest economy. I think that's abating a bit here. So, it is what it is. That's good, I suppose. Economic data, and there's a million different names for these things now. The S&P Global Composite PMI Final. Oh my goodness, what a mouthful. Anyway, 51.3 versus 50.9. Reading above 50 implies economic expansion. So on balance, that's a relatively positive number. Came in slightly lower than previous numbers. But, as long as we are above 50, then that does mean that the global composite PMI final, whatever the fuck that is, the economy is expanding. So economy is expanding, workers getting paid less, not so much pressure on that inflationary front, job market slightly cooling. If anything, I think this is in line with Chappell's. I don't see stag, nor do I see inflation. So economy's expanding, so no stagnating economy there. Wage pressures are weak. Did he know this data when we met there with him through the middle of the week, and he felt as confident as he did speaking up at the podium there about this? Probably. So anyway, it is what it is. And what's the market's reaction? The market's reaction is a big old fat rally. So if we go back to the headlines, if anything, I kind of like this as just a nice little summary page. Dow's up about 1.125%, 400 points. Oh, goodness, these numbers are going to get ridiculous. S&P sitting up about 1%, same sort of thing. Where is the sort of outperformance today? Well, it's clearly in technology, high beta stock land. Why? Well, one of the darlings of our most recent bull market, Apple, came out with numbers. I don't know whether I would necessarily call this a new bull market for Apple, but nonetheless, that's a pretty big move to the upside there, eh? So how much of this is just Apple itself? That's not the screen I wanted it up. I might argue that a big chunk of this is Apple. Actually, it'd be interesting to see if we could actually come up with. Oh, that's the same damn screen I had just a second ago. Well, I mean, just on balance, FinViz, I think, is a fun little website that we use just to illustrate what's going on in the broader market. And of course, there is Apple. Nvidia's having a pretty good day. So I suppose Mr. Fink's portfolio, he's long this AVGO and he's long Apple. He's loving that life. I don't even know where Tesla is on this thing. Interesting how Tesla's kind of shrunk back. Oh, there it is. Oh, it's so small now. Look at you, little Alan's got some shrinkage going on here. Anyway, so the point of the matter here, Apple's is the darling of the day. And interesting, really, you could argue the rest of the market's kind of meh. It just seems to be Apple and Nvidia who are leading the charge. If we pop on over, and of course, interesting, Apple's numbers weren't, stelling. Fiscal second quarter earnings were slightly higher than Wall Street had expected, but showed overall revenue down 4% and iPhone sales falling 10%. Well, considering that, I mean, I don't know how many of you buy Apple desktop computers, because I haven't really heard of anybody owning an Apple desktop. I do hear people own Apple laptops. That's pretty popular. But I think that the big thing was the Apple iPhone sales and the ever growing market for Apple and Apple products. But just looking at the price chart, there is your price action. And as I said there a moment ago, I don't know whether I really would consider this a new bull market, because as you can see, all we've done is just rallied right back into trendline resistance. Oh, what a surprise. And interesting how it opened up violently all the way up top here, and all it's done is met selling here through the day. And if anything, that's probably like Chris was saying, that he made a bit of money shorting that opening range trade fail. Because these kind of names, they all gap violently higher. In pre-market, this thing was going crazy. And then as soon as the retail people come out and go, hey, I could sell. I mean, what's so funny is this is so cliche. I don't know. Is there such a thing as a reload short zone? And could they be potentially, well, what the hell happened there? Could they be potentially, oh, there we go, just selling into trendline resistance and into good old mountain man level? And also, too, you notice, oh, gee whiz, there's a big fat price gap that needed filling in. In fact, doesn't even look like it's been totally filled in. So we're probably going to play around here for a bit. Definitely don't think that there's a trade to be done here other than the fade. Kind of like what Chris was saying, how he sold that opening range and made a couple bucks. Like that would be a typical fade trade. All right. So, there is, number one, relatively friendly jobs number. What's good for Wall Street, it's not really very good for Main Street. And what's good for Main Street's usually not very good for Wall Street. So we got a scenario today. People on Main Street are going to be moaning and complaining. And geez, I even saw somebody else post today that they went and had to replace a couple car tires, and quite literally, the price of that was double what they had to do just a few years ago. So us in the public, we're feeling the pain, but ironically enough, in Wall Street and in the stock market, they're feeling relatively happy. And I think the primary reason is because maybe we won't have to see a ramping up of interest rates. You can see the bond market relatively happy coming out of that news. It is interesting to see we are getting some Emmys coming in here, kind of like the Apple story. If we pull up that ES chart. I think we just had it on the screen there a moment ago. Let's see if I can just zip back there. Where are you, Mr. ES? There you are. I wouldn't necessarily call this a new bull market. If anything, I'd almost call this like relief rally. And we all know the rule. I mean, yes, this is Collins' dump chaser zone. Sometimes first stop becomes the only stop. I don't think that that's the case. I think in this particular case, just like the Apple, I would not be surprised to see that we do things like rally back into reload zones. So there is 61.8, good old mountain. And actually, interestingly enough, that is the original structural fail level. I would not be surprised over the next week or two that we sort of begrudgingly push our way up into that event window. And then maybe we get presented a new selling opportunity. I think we also talked a little bit about all these trap bulls in this wick up here. They would love to get released. You can see to a certain degree, a few of them did get released here right on the open. I don't know. I mean, maybe this is just too big of a hurdle. 30 SMA. Is there a little bit of a price gap there that needed filling in? Yes, there was. Usually these gaps, though, they to be filled in, they actually have to have a candle body up here. So I really wouldn't be surprised that through the coming week, also too, we could even do very simple things like bull AB equals CD. So this would paint an upside objective. Yeah, just a little bit higher than where we are. I still think there needs to be a candle body up in here. So I wouldn't be surprised over the coming week that we actually see a little bit more uppy here. Once that uppy exhausts itself, though, interesting, we're just right back into the original topping area on the price chart. This is the big ES futures. And I wouldn't be surprised if there's going to be a little bit of a fight up here. So there's sort of your broader market. How does Bitcoin fit into this? Same sort of thing. I'd started off the broadcast that I absolutely unequivocally think that this was a sell the rumor, buy the news event. Actually, I think I had it on the futures. Oh, there we are. That's interesting. Did the Zoom call just die? Fascinating. Okay. Well, my screens just disappeared. Well, anyway. Did you just kill your camera feed? Is that what happened? I know sometimes that happens. Oh, interesting. I don't know. Okay, well, anyway. So finishing our thought here, I mean, this is absolutely textbook, folks. Take a screenshot of this. Like literally, this is great learning material. So there is your FOMC. FOMC put bottom in the market. They definitely did. The sentiment down here, CZ going to jail, Roger Ver being arrested for tax evasion, it was very, very negative. And ironically enough, in the face of that, I think the market just ran out of sellers. So, path of least resistance, let's start climbing it back up. You can see where reload short zones are. What's fascinating about this level here is it is also trend line resistance off of the original top, way up here. Boom, boom. This is the top that we're short off of. And those happy little shorts are just doing their thing, just twiddling their thumbs. And keep in mind, this is the quote unquote free portion of this trade. We sold, bought back half of the position at 2-1, stop at scratch. Man, we'll just see where the hell the wind blows us. I don't know what's going to happen here. We'll just see. Anyway, so the point here is I think we hit a bit of a capitulation, panic lows, especially with CZ news and Roger Ver news. Dead cat bounce, call it what you will. We did have short setups that were working, bought shorts off of this railroad tracks fail level. Move stop to scratch on those events, then move stop to trailing on those events. Anybody who was in this bot, I wouldn't have a problem if you said, Brian, I got the fuck out of here. Totally fine. You should have made some money on that bot short if you were. What's happening now looks to me like, just basically off of this range, we've bounced to the 50% level. And I would argue that we've got, if you actually look at this double bottom here, down, up, down, breakout, way over here, that paints bombs. So there's 2.618 off of that bottom, which, what a surprise, would just take us right back into this original institutional fingerprint. And also into basically the midpoint of the reload short zone, that sweet spot of that reload short zone. It also would take us into trend line resistance. So we've got bombs, reload zones, original institutional fingerprints, down trend lines. I swear, when I saw this yesterday, I was like, I can't believe how many levels there are here. So it really doesn't surprise me that the market is rallying up into here. The good part about this is maybe if we're really lucky, this is that sort of final dump event following the halvening. Where's our halvening? So our halvening is over here. I don't know. My hunch is, and this is just a hunch, we are painting lower highs and lower lows. So there really is no quote unquote market structure to justify our bullishness. We do have valid downtrend lines. Remember, I showed you that downtrend line off of the lower time frame chart. I think we have to come back and kiss that. And then, of course, like we said, just off of this range, that is a reload short, and it is also a bomb off of this bottom. And of course, you know whose birthday is coming up a couple weeks from now. So I don't know if we dump into my birthday. I mean, usually market's soft. I can't really be overly bullish in the face of this. What I would just simply say is, hey, we bounced off of a really, really negative sentiment event here. If we can start Wing out and recapturing trend lines, ideally we'd like to see, this market, it looks like it wants to come back up into, resistance zones. Where's that futures chart? There it is. I think the market wants this level. And through the weekend, we probably will enjoy a nice, the wind is at our backs. It'll be interesting to see. I think there is inflation prints coming out next week. I think Ed was mentioning that that's what he'll be looking for into next week. That will probably sort of stop this short-term euphoria. But through the weekend, this probably should be a pretty enjoyable environment. And then kind of finish off this free conversation, here is our total market cap proxy. I think we hit bear AB equals CD levels. So I think you can make the argument that this is kind of like bottom end of the range. we've done a lot of technical damage here, right? This actually closed down low here. Didn't close through these lows, so that's encouraging, but we've done serious technical damage. The same thing with the Bitcoin. We are battling with trend lines right now. But as you can see, we're enjoying a nice counter trend rally, dead cat bounce off the lows. Probably maybe up, test this high right up in here on this total market cap. That's 2.416, 2.417. So I think there's still a little bit of room that this thing could rally up here. And interestingly enough, I actually might make the argument that there are a lot of Schult coins that are actually coming down into trade location. And I posted quite a bit on the site that, when we were looking like this, Brian's like, God, cool your jets, slow down, don't chase. You're going to get yourself killed here if you go and buy. And you can see what happened. Anybody who chased up here got destroyed. But here we are. We're actually below reload zones now. You know how much the Beamish loves his 78.6s. So, we're actually in trade location. 3 reasons for a trade: trade location, 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 location. Always the most important thing. Then we want to look for indicator confirmation. Do we have bullish divergences starting to develop? You can definitely see Willie's stupid. Interesting, you can see we've got higher lows happening on some of these indicators. I don't think we're quite at the point of indicator confirmation. Like, we'd need these kind of names to have a nice little dead cat bounce pop up here. That'll fire all the indicators bullish. And then we can move on to step 3 of, do I have price structure W's to frame actual trades? So if you're a nanny nibbler and you don't really care too much about timing your purchases, you just want to force yourself to come in and buy against the bottom ends of ranges, I think there are actually a lot of really, really attractive ideas out there. You want to try and time your purchases a little bit better. These are all the names that we are following right now. Of course, this is my crazy little old lady portfolio. And you can see what I've just simply said is, start hunting W's. Where a lot of these names have come down into trade location. Now it's just really a question of, can you actually start seeing W's start to form? I don't think a lot of them have formed yet. Like I said, we're in trade location. So if you're a nanny nibbler, rock on, have fun. I think that, through the weekend, especially if you're playing meme coins, and we've got Mr. Meme Coin coming up in the after party here, if there ever was a Mr. Meme Coin. And, we haven't even looked at some of the Schult coins recently. And if you want to play this part of the market, it's a super fun part of the market. But here's a really good example of a meme coin, this Peep, whatever the fuck this thing is. And I mean, you can see the W's coming in here. I mean, W's are W's are W's. So if Bitcoin's got a relatively friendly weekend, if the total market cap index is pointing up, and, all we're doing is just counter trend rallying back into, get out there and have some fun in these fun little days. Because I'll tell you, some of them look pretty good. I know there's guacamole. I think this was a fun little meme coin. I think it's got actually, wait, it might have gone now. Let's see. Yeah, I mean, W's are W's are W's. So there it is. So anyway, let's go on and head on over to the after party and let's pull apart. I think, Stephen, how many names you got us to look at here today? I think he said he's got a whole list of them. So
Got like 15.
15. Yeah. You heard that. I mean, is there a reason to join TRI's after party? I think that there is. And I have a funny feeling that there is some money to be made if you are a trader. Now, keep in mind, we don't fall in love with these damn things. But I'll tell you, if this guac pops here, you can see I've got my shot orders working. I did do a little bit of buying down in here at these levels, so I am long from these levels. It could be a fun weekend here, folks. So I'm going to leave the video at that. Adam says poop cat. Pop cat, not poop, pop, Brian. Hey, let's go and have, hey, speaking of Adam, what's your potato look like? I think potato put in a pretty good looking bottom here. So, if you play this space, right? In fact, we even talked about this level being a buy, caveat emptor. go and have some fun in this space. But anyway, I wouldn't consider myself an expert in this space. I have some fun, and the accounts moved up nicely. You can see it's about $900 right now from the original $500 funding. So at least I'm not losing money in this space. But if anything, we've got on a guy in the after party today who has a lot of fun in this space, and he's really, really good at what he does. So if anything, I'm super excited to get over there and listen to what Steven's got to tell the community here today. So on that note, have yourselves a fantastic rest of your day. PMA for the win. Slow and steady wins the race. I think hopefully I've put sort of the market action into context. I think the theme for today is what's good for Wall Street is not so good for Main Street. So if you live in Wall Street land, you got to be relatively happy today. If you live in Main Street land, you got to be pretty pissed off that the 1% is once again doing their thing to the public. All right. Have yourselves a great day. See everybody for broiler chickens on Sunday. All the best. Hugs and kisses. The only thing left Brian say is maybe even consider joining our education program. New school term starts in a couple of weeks, and I don't know any other place on the interneting that gives you the rounded education of how to build and run a small business of trading with the expectation of being profitable than anybody else on the net. So, all right, now we'll end the broadcast. Have yourselves a great day. Remember what your number one job is. Don't take no with nickels, and bye for now.